So today I have a very special guest on our show. And this is my life partner and also an expert on insurance, life insurance per se. So we are going to dive into a very, very important topic that's not talked about much. And it actually has a lot to do with mortgage protection. So obviously I'm in the real estate industry. My life partner here, Nasire, he is in the insurance industry. So we work together a lot. We do a lot of collaborations. And today I just thought that this would be the perfect collab to talk about mortgage insurance. So without further ado, I'm going to have Mr. Nasire with Bay Legacy go ahead and introduce himself.
What's going on, everybody? As she said, my name is Nasire. Yes, I've been in the insurance industry for quite some time now, seen a lot, done a lot, and just really eager to help people and try to avoid some financial pitfalls.
Wonderful. Love it, love it, love it. Now, for our viewers, Mr. Bay, where can they find you? Like on Instagram, Facebook? Where can they find you to seek you out to get this assistance?
Yeah, they can go to my website, baylegacy.com/home, or they can find me on Instagram at I don't know the exact handle, but it's
It's
like
okay. We'll
Bay.
put it somewhere here because this is a recording. So we'll put it up somewhere here on the screen so you guys can see later. But I just wanted to
Mhm.
kind of get that out of the way before we dive into some questions, because I do have some structured questions for you. And if you guys don't mind, I actually do
Okay,
have
let's go.
notes so that it can be structured and we can get these questions answered as far as mortgage protection. So, Mr. Bay, the first question that I have for you, I'm going to be reading off of my um, notes because I want to make sure, again, it's structured. So, the first question that we have today surrounding mortgage protection is, how does mortgage protection insurance differ from traditional life insurance policies?
Okay. Oh, wow, you starting out heavy with it, huh?
We're just going to dive right in.
Well, traditionally, a mortgage protection insurance, it specifically covers the outstanding balance for a mortgage. And so it pretty much takes care of that balance for the on the mortgage side. But when it comes to using a life insurance policy, you can actually have a lump sum of money paid out to your beneficiary, and they can either use that money to pay off the house, do a big chunk on it, or they could use it to just ball out. It's their decision.
Oh, wow. That's something that everyone who owns a house should pretty much have, won't you say? I mean, if they
Yeah,
actually care.
yeah, because it gives them more flexibility. Because who knows, after a married couple has been together for so long, they may not want to stay in that house just because of the memories and things of that nature. They may want to start off fresh, so they can use that money and do some other things. Do
Wow,
an update.
including get a
Yeah,
new
do an
house,
update on that.
possibly.
Yeah, do an update on the house so that it's easier to sell, and then move on to the next thing.
Hmm, I like that. Now the second question, right? Can mortgage protection insurance be customized to align with specific mortgage terms and conditions?
Uh, in a general sense, yes. I mean, there are a lot of different factors that go into it as far as the balance on the mortgage, the interest, repayment schedule, stuff like that. But it can be customized to the individual.
Okay, that is good. I'm pretty sure someone out there might want to know that. So that's good to know. The other
Mhm.
question that I would have is, what factors determine the coverage amount needed for mortgage protection insurance? And I'm pretty sure everybody wants to know that.
Oh, yeah. Well, one thing that's going to influence that is whatever the outstanding balance is.
Okay.
Uh, because, the average home, especially here in Birmingham, Alabama, the average mortgage is what, somewhere between 200,000 to about 300,000 is about the
Two,
average.
250 to, maybe a little more, depending on how much people put down, whether it's 20%, it all depends what type of loan that they have. But yeah, I would say
Yeah.
between the ranges of 250 to 350 on average.
Yeah, so a person who is looking to protect their legacy in this way, they can either do it right before, excuse me, they can do it right when they get their mortgage, or they can get it anytime between now and the time that they pay it off, because you actually may be in the middle of it and have an opportunity to actually um, still get one and cover the cost of whatever the remaining balance is, because that's the other factor, because you may still have a balance. It may not be the full balance, but you
Yeah.
can do that to take care of that as well.
The remaining balance. Okay, that makes sense. Just in
Mhm.
case anything happens to you, if I owe an extra 60,000 on my house, I can go ahead and take out that mortgage protection, and that way, they don't forfeit my house or foreclose my house in case something happens to me. That way, that money is there to protect that remaining balance that's on the mortgage. Is that
Hmm.
correct?
That's correct.
All right, wonderful. All right, so the next question we have: are there any exclusions or limitations to mortgage protection insurance coverage?
Well, now this one it is going to have some limitations. Typically, it's going to pay out on the event of somebody passing,
Okay.
and then the mortgage payments would be taken care of. But some of the
Hmm.
factors, because we're talking about life insurance essentially here, so there are some pre-existing conditions. Age is one thing to consider. If you're over the age of 65, typically this may not be the thing for you. But
Oh.
if you're between the ages of, say, 25 up to about 50, there's
Hmm.
a good opportunity that you can actually qualify for such a program as this and be able to get that taken care of.
Beautiful. So you would say the younger that you are, the better off insurance would serve you, pretty much.
Correct.
Okay, wonderful. So the next question that I have here: can mortgage protection insurance be integrated with other insurance products for comprehensive coverage? That's a good one.
Yeah, it definitely can be bundled. Um, one, I guess, a myth that's out there is some people think that you can only have one type of insurance, but no, you can have multiple. As long as your budget allows it, then you can get
Yeah.
as many as you need. And so there's such things as like disability insurance, critical illness. Um, there's quite a few different things that can be done. In this particular sense, you could actually get what's called a term policy. Now, in most cases, I wouldn't recommend somebody getting a term policy, but you can actually get a term policy and have it for the same amount of time that your mortgage is. For what, like an average mortgage is like 30 years?
15 or 30, yeah, on
Okay.
average.
So you can actually get a term policy that matches up with the time limit for your mortgage. And
Oh,
so that
that's
way,
smart.
yeah, so get a term policy for 30 years for like 250,000, and if you happen to outlive that, then one thing that I would suggest, because if you do qualify for such a plan, I would recommend for somebody to get a term policy with a return of premium,
Hmm.
because here's how you can actually double dip, okay? Not only would you, let's say you take out a mortgage for 25 years and
Okay.
you take out a return of premium policy for 25 years. So what's going to happen is that you outlive that policy. That means that you got a house that's paid off free and clear, and then you can actually get 75% of what you paid back into that policy back into your pocket.
Did you just give away a big secret, Mr. Bate?
I think I may have. It just came sporadically, but that is something that can be done. So that way you can really set yourself up for some success.
Wow, I absolutely love that. Okay, wonderful.
Mhm.
Now this is might be a joke, a little conspiracy. Got to throw it in there. It's outside of the questions that I have, but a little birdie told me that there is such thing as insurance for alien abduction. Have you ever heard of that?
I have heard of that, and it does exist.
Oh
There
my
are some
goodness.
companies out there that do that, but ours, we're not one of them. We're not one
So I
of them.
won't be able to come to you to get insurance for alien abductions,
No, no alien abductions.
but I can definitely get mortgage protection.
You definitely can.
All right, I love it. Okay, got to throw a little humor in there, right?
Yes,
Okay,
yes, yes.
so then one of the just have a few more questions for you, Mr. Bay. The next one that I have, how does mortgage protection insurance handle changes in mortgage terms, such as refinancing or let's say an early payoff?
Okay. Um, as far as the mortgage is concerned, that's one thing. But when it comes to the life insurance, that's pretty much going to stay the way that it is. Now, if somebody refinances, and correct me if I'm wrong because I'm not an expert in this field, but
Right.
when they refinance, they're going to have a lower balance on their mortgage. Is that right?
Potentially,
Potentially.
potentially, yeah. It can be lower or because the interest can go up depending on what you're, well, I'm not a mortgage expert or anything, but this is just from my knowledge, from my own experience. If you're, let's say the interest rate before the refinance, your interest rate you might have had a good interest rate, maybe 2.3.
Hmm.
Now, when you try to refinance, for whatever reason, maybe the interest rates are now what 6, 7%. So you can see the difference, how that can
Hmm.
differ. But that's circumstantial. So, but
Yeah.
that's just a potential. Yeah.
Now, but when it comes to the policy itself, let's just say if they did do a refinance and
Hmm.
they end up having a lower balance, and let's say
Hmm.
that mortgage was 250, but now
Hmm.
it's down to say 200, but they
Hmm.
still have a policy for 250. So
Right.
God forbid if anything happens, they got an extra 50,000 that they
Wow.
still have there.
So this
And
is some good stuff.
yeah. And then there are certain riders that people can add with the policy. For example,
Hmm.
like a terminal illness rider or um, a waiver of premium policy, not policy, but waiver of premium rider.
Right.
The
Okay.
terminal illness, that would actually accelerate the benefit on the policy, which
Wow.
means that the person can actually utilize, in most cases, the full face amount for their
Hmm.
policy to pay off stuff.
Wow.
Or if they get injured on a job and they can't work and they're on disability, they can
Hmm.
actually have the premiums waived as long as they're disabled. So that way, God forbid, if anything still happens to them and they're not working, that
Hmm.
mortgage can still be covered.
That is beautiful. Now, I see that you mentioned a big word, and this is just for some people who might not know what a face value is. Could you just briefly explain to our audience what is a face value?
Uh, the face value is the amount that's going to be paid out to the beneficiaries upon your death. Um,
Beautiful,
yeah.
beautiful. Thank you so much. I do appreciate that clarification. Now, Mr. Bay, just have a couple more questions here for you, and then we can release you. I know you're a
All right.
busy person. You probably have clients waiting for you.
Yeah,
But
got to get back on these phones.
gotta get okay. So I just have a couple more questions. Now, this one is pretty interesting. Now, are there options to accelerate benefits in case of disability or critical illness affecting mortgage payments? Like, what if they can't
Oh,
make the payments? Yeah,
I guess I kind of skipped ahead. I do apologize.
it's
But yeah,
okay.
that's the situation where if they do end up getting sick, they can utilize up to, in most cases, the majority of the full value of the policy, at the very least 90% of it.
Mm-hmm.
There are riders, as I mentioned, that will cover you if you do get on disability.
Mm-hmm.
And
Okay, I got you. So that's what the riders would serve as.
right, right.
Okay. Oh, that's so it's really important to have riders on your policy, then you would say.
Yeah, yeah. And it's very inexpensive to add a rider to a policy in most cases. It may be an extra $2 to $5 at the most
Wow. So like
when it comes to riders like
accidentals and
this.
things of that nature, loss of
Hmm.
income, those will be considered riders on the policy. And then you
Yes.
just have to pay an extra couple dollars or whatever just to have that extra cushion of protection.
Yep. Yep.
All
Yep. Yep.
right. I am loving this. Okay. So the last question that we have here is what happens to mortgage protection insurance if the insured decided or decides to sell the property or move? That's a good question.
Okay. Well, you have quite a few different options.
Hmm.
Okay. For example, if you do the option with the term policy with the return of premium, whatever the cash value is on that policy, you can actually surrender it and just
Hmm.
get that money back that you put into it. or you
Wow.
can decide to keep it. Because if you're looking for another home that's within that same price range, you
Hmm.
can still have that policy there to protect you on that new house that you go to.
Oh, so you can always transfer it to that new house. It doesn't make a difference. Or you
Yeah,
can just cash it out for what you've already initially put in.
yeah, and that's the advantage of having a life insurance policy versus getting um, the mortgage protection. Or I guess they have another word for it when the mortgage company actually insures the mortgage.
Oh,
Uh,
so you mean have your own private um
hmm
insurance for your mortgage versus the what they call it, the PMI, the private
hmm
mortgage insurance. So okay, so this is something that you
Yeah,
would do outside of that to give you extra
yeah,
cushion. Okay, I
right.
like that idea a lot. That is really, really good. So I really hope our listeners are listening and you guys contact Mr. Nasir Bey at Bay Legacy for some mortgage protection. Now, this mortgage protection will be outside of, like say if you have private mortgage insurance, it will be outside of that, of course, but well worth it. You should definitely talk to Nasir Bey about getting you some mortgage protection. I feel like everyone that does have mortgage, this should definitely be something that you're looking at for obtaining
Yep,
immediately.
yep, yep, yep.
All right. So thank you so much, Mr. Bay, for your time. Do you have any add-ons that you would like to leave our listeners with?
Um, the thing that I would say is that the younger you are, well, let me say this. Life insurance is always based off of your current age and current health. And for somebody as young as us,
Because we are super
we may not,
young.
that the thing of immortality is just really there. We think we're gonna live forever. Uh, but the reality is, at some point in time, we're gonna end up checking out and going home.
True.
And so it's best to get it done now versus later, because there's so many people that I talk to that are in their 70s and their 80s, sometimes even 60s. They really wish that they had took care of this when they were in their 30s and 40s, because the price of insurance is way less when you're younger versus when you
Right.
get older. So if you
Right.
haven't done it now, get it done.
Get it done. Now is definitely the time because I believe in protecting legacies and lifestyles. What about you, Mr. Bay?
Of course, that's why the name is Bay Legacy.
Right. So thank you guys for joining us. It was such a pleasure having you on our show today, Mr. Bay. And once again, just let the audience know where they can reach you. I'll also put it up on the screen. And until then, my friends, be well and have a blessed day.
Peace out, y'all.
Peace out.